Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, looking at the markets this week, we've still got trade concerns over tariffs that countries seem to be continuing to sort of go on a tit-for-tat basis. Over the weekend we've had suggestions that Canada and the EU are going to retaliate to the US tariffs that they're thinking about. Certainly autos is a big one for the European Union, and that is going to be a factor that investors are going to have to play around with this week. We've also got political risk that has come about recently, not coming out from the migrant crisis in the European Union, which is seemingly more of a political one than a human one necessarily, because the migrant levels are down significantly from where they were a couple of years ago. But still, the political angle of it is the fact that we're seeing sort of more of the populist parties bringing up. Subsequently, the European Union are trying to sort of act to prevent it from becoming a real issue going for the political side of it. In Germany, there's a risk that Angela Merkel could actually be brought down by this. The suggestion over the weekend that her coalition partner, the CSU, the leader of that coalition partner, could actually resign, and subsequently that could bring about a chain of events that might actually even sort of result in the end of Angela Merkel as German Chancellor. So subsequently the political risk in the European Union is elevated at the moment. Will that drag on this week? Will that be a drag on the euro if it is sorted out? Certainly it looks like the euro is more of a positive performer in recent times, certainly against the dollar, which the dollar has been strong, but the euro has been holding more of its own in recent weeks. So it'll be interesting to see if that political angle is sort of reduced. Therefore, we might be able to see the the euro rallying. There's a lot of economic data this week. That the first week of the month is always dense with data anyway, but you've got the PMIs throughout this week, the services sectors, the manufacturing sectors, and also we culminate in non-farm payrolls on Friday. Now the average hourly earnings is always going to be, certainly at the moment anyway, is going to be the important factor, because what you can see in the chart that I've got here is that all the inflation metrics are pulling above 2% and rising, and you've not really seen the average hourly earnings picking up too much yet. Average hourly earnings picking up is probably the sort of last piece of the jigsaw really for the inflation story in the States. And if that does start to pick up above 2.8%, that would be a multi-year high on those average hourly earnings. So it'll be interesting to see if that happens on Friday, and this is a focus for certainly this week. In terms of where the forex markets are looking, what you have got on euro-dollar is, as I said, a bit of a floor going on. There's been a volatility around this floor, 115 big figure, or 1505 if you work to the pip, but it's seemingly is a floor of support that's now sort of in place. Now, is that floor going to be tested again if this political pressure rises on Angela Merkel? That's the question. If the political pressure sort of starts to recede a bit, then we might start to see the euro rising once more. Towards the end of the week, we've got payrolls which have a factor on euro-dollar, but certainly at the moment I think that euro-dollar is still potentially in the process of sort of forming support and a bit of a base pattern. Not necessarily so much on cable, which is still under pressure. Lower highs, lower lows, breaking below the 31 figure support last week. Looking at those key October-November lows, 30.25, that will be the key support this week. If they break, you're looking at obviously below 130 big figure, and then you start to think about serious sort of moves in terms of the correction in sterling, and that wouldn't necessarily be a very good thing at all. You've also got dollar yen, which has been moving sort of on a safe haven vibe at the moment. The data out of Japan has not been great. The Tankan survey was sort of pretty middle of the road, not great. Retail sales in Japan didn't do well last week either. So in terms of how that sort of affects and plays into monetary policy, it's fairly dovish and doesn't really do well for sort of the tightening, even though there seems to be a bit of a stealth tightening going on in terms of bond purchases. There is still sort of the data that doesn't really sort of go for much of an argument for the Bank of Japan to tighten policy anytime soon. So the dollar yen has been rising but it's coming up towards a key area of pivot between sort of 11 big figure 1140, and if that's a big ceiling that it needs to get through to really suggest that the bulls are sort of pulling forward. Now, in terms of equity markets, the safe haven flow is a key factor here, because we've seen equity markets in Europe especially under pressure. The DAX, every time the trade tariffs comes up as an issue, DAX falls like a stone, and it's broken below 12,600. That implies 12,000 big figure. Now sort of it's buzzing around at the moment. It's sort of open lower on this political risk today. It's rallied a touch, but it still seems as though rallies are a chance to sell. Seems as well that that is the case with FTSE 100 sort of breaking back below 7,600. Sort of opens this support just above 7,500, but ultimately it looks like it's sort of drifting. If that continues, and downtrend channel continues towards 7,300 in due course. S&P 500 is has been corrective and sort of playing around with some fib levels at the moment, but I think that it still looks as though it's sort of on the corrective move at the moment. 2,692, I think it is, the support area. If that breaks to the downside, you're looking at 2,670 area. Again, that's supportive, and these are sort of key levels on a near-term basis. But certainly the European markets look far more corrective, and that is interesting that the focus is still on sort of the markets which are going to be more impacted by these trade tariffs. Commodity prices, gold is moving around on the dollar. It's not necessarily moving as a safe haven at the moment. It's moving around on the dollar. So when the dollar's strong, gold is weak. When the dollar is weak, the gold price tends to find a little bit of support. Gold is strong on Monday, so we're seeing the gold. So the dollar is strong on Monday, so we're seeing gold down, and that is continuing towards the support at 1,236, and that's the key level that we're looking out for. In terms of oil, it seems as though that Donald Trump's trying to wade in again on the oil price, sort of putting a bit of pressure on the Saudis to increase production, and that has weighed on the oil price. And if the Saudis do increase production, we could well see the oil price starting to come back again. So that's the key factor to watch near term. A bit of volatility around the inventories as well. So in terms of data points, again, for most of this week, we're looking at the PMIs on Monday, and then on Wednesday we've got the Eurozone, China, and UK PMIs. It is 4th of July holiday on Wednesday, so no US trading then. So all their data gets pulled over to the Thursday for the services PMIs and also the ADP number. But then the big focus will be on the US non-farm payrolls on Friday to create the volatility, which it's likely to do. So I wish you good luck in your trading throughout this week, and I will speak to you next time.